Market observations, Toowoomba, Queensland. Now this is an area which is talked about a lot in the national media from property investors, from individual mums and dads, from other buyers agents or investment companies. This is an area that we've also been purchasing in ourselves for our clients, for the buyers agents that we work with, etc. This is an area where, we generally don't disclose the locations we're currently buying in. Obviously, it costs us a lot of money as a research company to find areas first, and we don't like to spread the word until we've planted our seeds. That's almost what we're doing now. We have noticed, obviously, a lot of the areas in recent months have been suggested by you, our audience. Now, I'm not being, negative when I say generally, individual investors rely on the media cycle. They rely on other investors, an echo chamber of what about this area? What about this other area? Okay, generally it's too late. Generally when it's been spoken about, professional investors, those in the know, potentially have been buying there for a number of months. So a lot of the videos we've been featuring lately have been by user request. Brisbane, Adelaide, and then even the Coffs Harbour video that we did, which was an online survey that was completed. This has been one that has been requested, been in the conversation circles in property for a number of months, but we thought we would change the tact, because a lot of the videos end up with, look, there's too much heat in the market. We know you asked the question, but we wouldn't buy here. We couldn't acquire here successfully. This is a market that we actually have been buying in, and as of today, still would if we could find the right deals, if they could stack up. It is still currently technically in our buy zone, although right towards the end of it. So we are talking about now, to finally summarise, a market that we are currently buying in that you, the audience, are demanding information about. So that's probably the introduction and the setting the scene. We are in a prime investment grade satellite city of Brisbane. Okay, this is a market that has undergone tremendous change and improvement, and it's got unsatisfied demand, extremely high drivers for good short-term, mid, long-term growth. That's the cheat sheet. Let's dig into the details and see what's actually happening on the ground and see if we are comfortable to continue buying there. All right, I do want to reiterate, I always start with this slide. Property investment is a science. Okay, it's not an art. There are parts to this that are art. There are subjective elements to property investment, but we do really need to strip it back to its core elements. Okay, it's not enough to just throw a dart at a dartboard and buy a property. We need to get serious about this. It does come down to market supply and demand dynamics. It's any market like any other. What I mean by that, we've got the demand side drivers on the left-hand side and the supply drivers. We have to find an undersupply in a market dynamic. And I'm going to touch on a few softer elements today, which I haven't done before, about assessing that, because there's some underlying, unquantified elements to the Toowoomba market, which it's been difficult to actually illustrate those examples previously with other markets. Toowoomba's going to allow us to do that today. So stay tuned for how to really dig deeper into this demand-supply dynamic and understand the property at a deeper level. So hold out for that. But investment property is a science. Let's skip through this. We're looking at demand minus supply equals our opportunity. Let's quantify each individually. The market opportunity. Let's start with employment. So once again, we have a very diverse employment landscape in Toowoomba. It's under 200,000 people as a city, and sometimes with a city of that size, we have a focus towards one or two particular industries. Not the case in Toowoomba. We have very diverse employment. We love that because it means that there's, not a huge amount of risk on one industry slowing down. There's other industries there to take its place. It's not a one mine or one mining industry town. We can see that here because health care and social assistance, social services is the most popular employment type, and that's only 15% of all. Some markets, some very familiar investment markets, have the primary industry at 40, 50, 60, 70% of all employment. Okay, that's far too focused on the one industry. This is very broad. You know, the top 5 here are only categorising, about 1/3, 40% of the overall employment marketplace. This is just my mental maths here, so correct me if I'm wrong. But, you know, the first one here, 15%, education and training at around 10% of all employment, retail, trade, construction, manufacturing. These are the core employment services generally across the nation. They are all putting their hand up as a focus in Toowoomba, and it is strongly diversified. That's all well and good. It's great to have diverse employment. It's also really good to have new employment projects on the horizon: construction, broad agriculture, broad services, manufacturing, etc. We do need to have a check and balance. If we have diverse employment now and lots of new employment in the pipeline, that's awesome, but we want to make sure that that new employment is not also focused on one particular industry. We don't want it to be diverse now, only to be too focused in 5 years' time. So the next check and balance is, let's have a look at the new projects in the area. This is private research here at Ripehouse Advisory. We have access to over 1,500 projects at any one time. At great expense, we gather this at regular intervals. Any project over $50 million capitalisation across the big ticket type of items. This is highly curated, very private information around what are the larger projects coming through the pipeline for each local government area across the country. All right. We need to be able to do it for the whole country at once so we can compare apples with apples. There's no point doing it for your LGA to validate your decision. You've got to be able to determine, is this area focused, or does it have a higher proportion of new projects to all the other areas that we are considering? So it's a big piece of work to be able to do this broadly. I might start this conversation by saying, yes, we do have diverse new projects in the pipeline. Once again, we've got mining, so rural mining as a large big ticket item, almost $1 billion. We've got the Toowoomba Hospital redevelopment at $750 million. The actual more broader precinct upgrades and overhaul of a whole quarter of the area of the town or the city is around $2 million in capitalisation. So very large health projects in the pipeline, not quite finalised, but in the final stages of approval. We've also got large spending here in corrective services. So once again, government infrastructure and spending. Then we're going back down into broad agriculture, cannabis growing. There's quite a focus of that in the area actually already. Education spending at $300 million. This is very diverse new projects in the pipeline. We'd love to see that because it means that our diverse employment landscape is pushed and fulfilled into the future. Now you can see this map over here while I'm talking about where these projects are located. Obviously some of them are here between Toowoomba and Brisbane. You know, this is categorised as a catchment area for these projects. We do have a percentage of the population, employed in these projects living in the Toowoomba area. Some of them are obviously directly in the Toowoomba area. Now this is an interesting number. This is great. We've got, billions of dollars worth of projects in the pipeline. That's excellent. But how does that compare to the nation? What is the spend per capita on new projects? That's a way that we can compare apples with apples and determine which area has a higher proportion of new projects versus the other. This area, this is an arbitrary number, around $20,000 per person in new projects on the horizon. Now you might sound, well, that sounds like a large number or a small number. When you compare it to the nation, it's in the top 20th percentile. So outstanding, excellent new projects per capita in the pipeline. We're on the right track with Toowoomba. We really like this because it has healthy employment as it stands now, but it is set to benefit from a strong pipeline of new projects. How does that migrate and move into the employment market? We have oscillation here occurring through COVID. This is a national phenomenon in the last 12, 24 months. We are on an upswing now, up towards 7% unemployment. That is slightly higher than national average, but it's not something that we would be, surprised to see over a Christmas New Year period. Generally, we are around this 5% unemployment rate, which nationally at the moment that is very low. That's very good. We're happy with that. This is something that we've got to watch and wait, but we expect this to correct back downwards once again and, confirm its longer term average or moving average at around that 5%. So generally employment in Toowoomba is, very strong, very buoyant, low unemployment. Now this is the hidden story about Toowoomba. We've got to be very careful when we track population statistics as a core driver of our investment area decisions. Okay, population growth is not one of the stronger correlating factors to predicted future price growth. Our data scientist confirms this. What do I mean by that? Well, you look at these two areas. Toowoomba, under 1% population forecast and previous trend lines. We do forward forecasting as well. Under 1% population growth per annum. On a national level, that is very low. If you can remember back to our recent Adelaide market observations, Adelaide is also a traditionally low population growth area. When you compare and contrast this to somewhere like, the area on everyone's lips, say Moreton Bay in Brisbane, northern Brisbane, we typically see 3 or 4% per annum population growth, very high on a national level. Now there's an untold story here which we need to critically analyse what this actually means to us as investors. Because on the surface, Moreton Bay, let's pile in there, 3 to 4% population growth per annum. But you also have, in many areas like Kalinga as an example, 6.5 to 7% in that suburb of new supply in the current building pipeline. Okay, so everyone that's moving towards the area, lots of people moving towards the area. For every person, we have twice as many dwellings being built that they require. In Toowoomba, we have very low population growth, but it doesn't mean we don't have a far greater multiple of people who want to move to the area and cannot. And they cannot move there because of the extremely low vacancy rates, which I'll get to in a moment, and the lack of new housing supply and the lack of established dwellings to buy. They have extremely low days on market, extremely tight buy and rental sides of the equation. So you have a lineup of people wanting to move to the area, but only 1 in 5, 1 in 10 maybe, can actually rent or buy in the area. You have this strong depth of unmet demand. So sometimes when you use things like population growth as a measure to assess an area, it's not telling the true untold story. We have to dig and combine metrics together to actually work out what is happening. So let's start here. Low population growth is not an issue here because we start moving down here into the days on market story. We have, very low days on market this time last year and consistently trending down over the period of 12 months to 20 days on market as of today. You have to think about that in practical terms. 20 days is measured from the moment the property is listed for sale to the moment it is taken off the market under offer. It's pretty much, impossible or very difficult, nothing's impossible, it's very difficult to transact on a property in less than 20 days. You've got a listing, you've got an open home, you've got offer scenarios, you've got a conditional offer to finance building and pest, you've got it then going unconditional. Good luck getting that process done in less than 20 days in Australia at the moment. This is about as hot as a market can get, okay? So we know now we've got low population growth, but potentially a lot of unmet demand, and this reinforces this. People wanting to buy properties in the area, move to the area, they've got a job lined up, they're in the construction business and they're building all these wonderful new projects. Well, good luck actually buying or renting a property. That's creating price pressure. High competition. We're at the longer term average for this area over the last 24 months, but this on a national level is extremely high competition as it is. We can see this has popped up over the 20 percentile mark. This is a percentage of properties that are selling instantly on listing. Okay, the people are just diving in here, offer over offer scenarios, vendors going, thank you very much, property's off the market almost before it was listed. Okay, this is an extremely competitive environment on the national level. We now start seeing asking prices moving very strongly northward. So we're now starting to see this unmet demand piling in, offer over offer scenarios, creating this strong price pressure. Now, this is an area that we are currently still bullish on. We're not investing just on short-term metrics. We are looking at the longer-term curve. And if you were to buy in Toowoomba today, you can still feel very confident of good, strong mid-term growth. There's a lot of good drivers there. But we definitely have left some upside on the table. We moved into this market first. There were no other larger buying organisations or groups in this market as we were there. The only people that were really buying in this market, obviously there's always exceptions, but the only people really buying as investors in this market were locals. Okay, we confirmed that by many sources. We got in there, we had the absolute pick of all the listings on the market. This was where we were acquiring property after property after property after property, and then we still continue investing through this period because we know it's still got a lot going for it. But as price is increasing, price growth is a natural handbrake on future performance. Okay, so as you have these short, sharp increases in value, the chances are that it's going to slow down do increase. The strongest negative correlation that we've identified for, or correlation between a market metric and future price growth, is sold price delta, the degree of movement in recent terms. So higher price growth in recent terms has a negative relationship to future price growth, believe it or not. So as this price growth has been occurring, you'd expect it to start slowing down. We do see a longer term strong buy signal from Toowoomba, but we've got to start questioning our entry point at this stage. I'll just leave that there. I'll come back to that in a moment. This is once again confirming the conversation. We've had stock tightening from 700 listings across the Toowoomba market, now down to sort of 400 listings. It's tightening by a factor of about, 80% of the listings that were once in the market this time last year not existing in the area. So a lot more eyeballs, a lot more focus over less dwellings. And this is now probably the outcome, the derivative of all of those charts. This is the one that sums it up, the aggregate, the days of remaining supply. This is where we can see an extremely hot market. On a national level, this is about as hot as it gets. Everyone's talking about Toowoomba, everyone's piling in there, everyone's doing deal over deal. We're still throwing our hat into the mix, but it's extremely difficult to get a deal that stacks up. And what I mean by that, I would expect to be buying at or below market value. Well, it's very difficult in this type of market. Okay, that's the reality of it. So an extremely hot market, days of supply under 100. I might just pause it there. I'm going to give you some example. I have mentioned, we were buying properties in this market, going back here to February last year, if not slightly before that. This gives you some idea about the volume and clustering of acquisitions in this market. So each of these dots was an actual property purchased, new hospital precinct going in here, Toowoomba CBD here. We've got a lot of higher socio in and around here. We've got a lot of lower to mid socio, a lot of lower socio over here. This is all mid socio. We try and focus around the 5 to 7s out of 10 as a market. We might buy a 5 and move it to a 7 after a reno. We might buy a 6 and move it to an 8. That's the sweet spot of really maximising the value uplift through an area. When we come into Toowoomba, even though it's got 200,000 people, it does work in rings. Okay, so if you're in the focus in the inner city area, you've got some commercial type considerations. You don't want to be next to a retail precinct or commercial outlet, etc. You generally have your upper socio areas pretty close into the CBDs. All right. We did sort of touch on a lot of those areas, and then you have your outer ring, your middle ring, which is your mid to higher socio areas. That's generally where we focus, and then we might focus on the outer rings, where it is between the CBD and the key drivers of utility. So a lot of key drivers of utility here in the northern area, a lot down here in the south, and we have very good access points in the Toowoomba CBD. So finding Toowoomba in the first place is only the beginning of your battle. You've got to really start thinking about this stuff strategically. These types of towns drop off very quickly. One street is considered by the locals as really good, and one street over behind it is an absolute no-go zone. Okay, with this type of size of population, we can't bank on suburb after suburb after suburb all being very similar. Okay, things do drop off very quickly. We have parts of suburbs which are no-go zones. Another final mention here is we have a lot of supply. We have to work out where the supply is coming into this market. If we are clustering our purchases here, we have to be sure that there's no supply risk coming into the market here. There is a lot of supply risk here in the northern quadrant. That's where they are building. So you've got to think about that as a positive. Okay, when you are between the core, the clusters of supply, that's going to make this area closer to the CBD than all of this supply. You've got the human psychology kicking in, all these people commuting past here on the way home at night thinking, hang on, I might want to be a little bit closer into the CBD here. So over time you do see new supply further out bolstering growth on the areas further in. It doesn't really happen in places like Toowoomba because the commute time's never really more than 15 minutes, but definitely that is the theory that we generally apply nationwide. We want to be between the supply and the key drivers of utility. In this case, here, here, and here. All right, that's just a little bit of a geography lesson. Let's jump back into it. I'll skip back forward in the slides. All right, percentage of properties above asking price. Look, it's a very heated market at the moment. We've got properties selling for 3-4% above asking. Okay, so the sales agents not really knowing where the market sits, not really able to speak effectively with the vendors and to market the property as where it's selling. They're putting their finger in their air, and the property's selling for, on average, 4% above asking price. So you just remember, for every one that they get right and it sells for asking price, there's another property that's selling for 10% above that. All right, so you can see here that the market's moving very quickly and people don't really know where it stands. Rental analysis. Let's have a look here. Days on rental market. I might skip through this, but we can start seeing a seasonal uplift in the properties available for rent. So how long it's taking them to rent. This is a seasonal thing at this point. It's not something to be concerned about. Remember, for this type of market with this unmet demand, low population growth, unmet demand, we generally see the rental side of the market driving the buy side demand. So this is a signal that we do need to be wary of. If we start seeing cracks forming in the rental side of this market, it's definitely our time is done here. Okay, so this is something that at the moment could be seasonal, but it's definitely something to observe. We might have missed our boat. The number of rental listings, it has been trending up slightly. So you can see, almost a very close correlation here between the rent and the buy side. As rental listings have been decreasing, so has the stock inventory on the buy side. But it has started to tip up firstly. And we do generally see this as a leading indicator of our buy zone closing. So this is another sign, another crack that's forming that we should be probably thinking about, thinking twice about entering this market as of today. House price, weekly rent. This is an extremely bullish signal. As prices have been increasing throughout this last 12 months, we have seen rents keeping pace. All right, so all of this buy side demand, we generally see an oscillation where rents grow and then prices grow, and one happens without the other. This has been a case of both of them happening in tandem. That's an extremely bullish sign. That means that yields have been holding throughout the 12-month period. As prices are growing, rents are growing, yields are holding. This is a sign that the market might still have some steam left to go. As mentioned, all signals are pointing that, hey, the market's very heated. We might have missed our boat here. But this is probably a signal to say, hang on, it might still have 6 months worth of very strong price performance left in it. You've got to ask yourself the question, is that 6 months worth of overperformance enough to justify your entry? Would you have preferred to buy in this market 12 months ago? Can we move around the country and find other areas that were like Toowoomba 12 months ago? That's the question. But you could do a lot worse. It still looks like it's got some steam left in the tank, especially when you look at the rental side of the equation. We've got a very diverse and buoyant employment landscape. Great new projects in the pipeline. This is a blue chip regional. It's a pretty safe bet. There's obviously no guarantees, but when you look at these regionals, this is a pretty safe bet for investors. You could definitely do far worse. Would I buy here? Personally, this is obviously just my opinion as of today. Well, it's still a buy, technically from my perspective, but it has to come down to the individual deal. right? You've got to use your on-the-ground networks. You've got to do your due diligence quickly. You've got to lead with your best foot forward. You've got to do a lot of digging to find those deals, and then you might miss out on 9 for the 10th one that you finally snag, okay? Is that worth it? Do you want to fight against the tide or try and find another area that might be working with you? Well, that comes down to you. Do you want the security of this area or find the areas first? If you'd like to have a conversation with us, we would love to have a chat, a property chat. We'd love to put together a no-cost 20-year personalised property wealth plan and talk you through that. There is a strategy to how we invest in these areas. We have a methodology that we put together for you to help you quantify. Obviously, there's no obligation. There's no takeaways or no outcomes for you apart from a good property conversation and a 20-year personalised wealth plan that you can take away. So if you'd like to take us up on one of those sessions, book into the comment section of this video for you can book straight into our calendars and have that conversation. I'd love to hear about more areas. I'd love to hear about feedback, any questions, any concerns, any queries about this content and research. Jump into the comment section. There's been a few lively conversations in the last few days on some of the older videos. It's good to see. It should be a supported environment for us to talk property, so I encourage that. And please, positive reinforcement is always good. Like, sharing this video, subscribing, and making sure to hit the announcement, the bell icon, so you're notified first of any future market observation videos. Thank you.